What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for January 20th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So as you can see, we're switching it up a little bit. We are starting out with Netflix, as Netflix is a big tech earnings to start us off for this earnings cycle. They essentially the profit fell short of expectations, but it did add 7.66 million new subscribers. Revenue was 7.85 billion, up 1.9% year over year, in line with expectations. Earnings per share 12 cents, missing estimates by 45 cents. Adding the new subs, much higher than the predicted 4.57 million subs. CEO co-founder Reed Hastings stepping back as executive chair. So, being said, again, you have to remember in the beginning of last year, Netflix lost a ton of subscribers. You have to also remember people were coming out of the pandemic. People just weren't going to play for Netflix because they were trying to go out and get out. They've been stuck in the house for 2 years, and then all of a sudden they gained a whole bunch of subscribers back going into this fall, and then now their subs are up a lot. Why is the reasoning behind that? Again, their earnings isn't great, but the subs are great because people are looking for cheap entertainment. Whatever the case is that you want to bring to the table, that is what's going on. Things are extremely bad, and we're going to see more horrible rollouts. Nordstrom also reported earnings today. Absolutely got obliterated. This is something I think it's, let me pull it up real quick. I think it's JWN maybe. Yeah, Nordstrom absolutely obliterated. Retail is not looking good, and this is coming off of a Q4. This is the holiday, so this is definitely not a good start to what we're getting ready to see in the next couple of weeks. The problem, again, going back to Netflix, I can actually switch this back over to the SPX. As I flip back to Netflix, the ad revenue thing that they're trying to gain more revenue from is going to be an issue. There's a reason why Google got hit really bad. Like I think it's like 60 to 70% of their revenue sources come from ads. And, when nobody's buying anything, there's no sense on purchasing ads. And so that's why we saw Google take major hits over the past couple quarters. Again, here, they're probably seeing some profit. Again, they didn't really do anything, right? Netflix, but the subs, they help. But it makes sense because if people are looking for cheap entertainment, they'll pay for Netflix, right? Because inflation's high. You have to pay for cheap entertainment. You're not going to just sit at home and not do anything. You're not going to go out and pay for lavish things at the moment because you're just trying to put food and have shelter over your head. So, of course, you're going to pay for some sort of entertainment. You're going to invest a couple bucks in Netflix. Not that big of a deal. So that kind of leads us to where we're at now and where we're going moving forward. Tomorrow, I don't believe there's really anything on the schedule. I think all the major stuff, we're going to get the digestion of Netflix tomorrow and see how that does. But as far as tomorrow's concerned, it's just going to be the digestion and then continuing about the things we talked about yesterday about Powell. And we talked about the 50-point basis move and people not really coming in line with a 25-point basis move and understanding that they're really aiming for a 50-point basis move. And now you do have more Fed speaking tomorrow. It is one of the last days before they go into a blackout period, so you're going to hear a lot from them tomorrow. You got the ECB president talking tomorrow as well. So it's really going to be an issue on what's going on moving forward. Things are bad and they're getting worse. And so, again, we haven't seen the worst of what is going to happen. And again, my mind could change, right? Like it's things things will not change until the Fed actually start laying off rates. That is the obvious answer to fix everything, but it's not going to happen because inflation is not coming down quick enough. If they just let off the gas and start pulling off rates, inflation would run through the roof. And then when it gets to a point, you can't even chase it down at that point. And so to be able to do that, especially with all the money printing, you have to understand too is that the student loans are coming due as well. So not only everything that's you have food prices going to all-time highs, you have rental units skyrocketing. You can't go out and just purchase a home. A lot of people don't just qualify for homes anymore, so you can't just purchase a home. So that's why the demand for rentals is so high and going to continue to be high. And then now you got to add on this fact that we've been delaying student loans because of the pandemic, and now people have to start paying student loans. So, on top of everything, and then if you don't have a fixed rate on any kind of loan that you have, these interest rates are going through the roof. Credit cards and everything, they're going through the roof. How are you going to get out of debt is the problem. And it's been accelerated by money printing, by everything else that's currently going on. And so we are waiting for things to essentially implode. They need to implode. We need these cycles, even though as nasty as they are, we need them to reset the economy so things can start working properly in this broken system that we currently hold. That's why a lot of people go into crypto, because they don't believe in this current system. I mean, I don't either. I don't think anybody really does, but they feel like there's no other option. And given, I mean, that power isn't just going to magically shift over into something else unless there's potentially something else in the works. I mean, who knows? But again, that's why crypto was essentially established. So, with all that being said, try not to dive too deep in that hole and pull us into what's currently going on with the markets. Not good. Again, we did gap down this morning, and then we started selling off pretty heavy. This 3,900 mark tomorrow is going to be important. We push back under it right before close. The question is with Nordstrom and everything else, that's given a lot of people warning shots about Apple or warning shots about Amazon, Shopify, and all the other retailers. Target, Walmart is going to be an issue. And in food prices, right? Walmart, the reason Walmart did so well because they're not so much aimed around retail items, but Target is, and so you could potentially see Target get nailed really hard going into this next earnings, especially with what happened with Nordstrom. So let's see what happens. Let's see what happens going forward. This is why we watch earnings closely to see what happens. Play potential downside to tomorrow on the market. Banks starting to roll over, so that's not good. But again, we have a lot of support here, a lot of these daily supports and weekly supports. So the market's been really kind of grinding against these dailies and really struggling. I mean, it blew right through them as far as any kind of support, and then now it's just kind of bouncing like they don't even exist. And typically, higher time frames, they're much stronger supports. And it's again the market just blowing through all these. I think you're starting to get more fear in the market when you're starting to see layoffs. Again, you got more layoffs from Microsoft this week, so. Again, not good signs moving forward. So we're definitely going to have to see what happens there. Bitcoin started to attempt to push up a little bit today, the 21, roughly around the 21K. Only lost about 500, but we'll see if this thing drops. I'm pretty sure this thing is going to fill the gap back down to below the 20, but we'll see. Again, moving forward, going into next week where we have a full week. And we start getting into normal full weeks again, and we're not having these short weeks every other week. So we're kind of getting out of that holiday mode, getting more so into what to expect here. So we definitely have to see what happens there. The dollar Again, the dollar holding the 102. Again, bulls, you want this thing to break that 101, 100. It needs to just sink under 100. Again, you're kind of in the double zone here. There's really a tug of war match currently going on with the dollar. The dollar breakout again back over the 105. It's going to be some big trouble for the bulls. So we need to keep an eye on that and see where that goes, and actually bump this back up to the 1 day. So again, we're continuing to hold there. Well, again, we'll have to see what happens from this point. We have to take it day by day because, I mean, again, my thesis is still overall very bad. Earnings are starting to show that. Again, these companies are doing horrible. I'm surprised they're not down 100, 200 points. So it's just things aren't good in general. So Tesla continuing to sell off. Again, if rates come in at 50, that's just going to put another pull all tech back down. If rates do come in at 50, again, people are expecting 25, and this thought process that we're not done with rate increases is going to hit tech pretty heavy, and we're seeing that. So Tesla's selling back off. Again, if this was a normal setup, that could easily be a break and a retest and then a breakout. But again, that really hasn't happened. You get a break, nice breakout, and then it just sinks right back into the channel. So we'll see if that happens with Tesla or not. Apple, again, wedge, break, retest. Could be it's the retest on the break right here. You see on the wedge here. So you broke the trend. It's the retest. Could we dive tomorrow is a question, especially with Nordstrom doing bad. Just leading into next week, things could get really, really bad. So BA, same thing. It's kind of breaking out, retest to see if this thing starts selling back down to the 192. Again, this is where a lot of your strength has been. So if this thing does start flipping and start selling, it's just more added sell pressure. You're going to get to the general index. Same with JP Morgan. Again, it's been slowly dying off and trying to recover. Again, this thing isn't going to fall straight to the ground. But things just aren't good. All you're going to need is one bad catalyst, and these things are just going to turn over and start selling. So Goldman Sachs, again, barely holding the 342. It needs to hold that, or it's going to gap down to the 321. The 321, and then you have another zone here at the 282. Again, there's always speed bumps along the way. As I was saying, this thing will go straight down. Again, you're also looking at a higher time frame, so it's not going to be. It could be, but more than likely, it will take a day or two or 3 days potentially to get down to some of these zones. So Bank of America, again, still struggling, selling off. Again, you don't want banks to continue to sell off. That's going to be an issue for the general market. Let's take a look at the VIX real quick. We haven't really watched the VIX. Again, the VIX is sitting around an area and consolidating. This thing is about ready to rip again. So one thing you definitely want to be mindful of and careful of is where this thing is sitting at. So typically, if you don't know anything about the VIX kind of gauges fear in a sense in the market, and or the volatility, I should say, of the market, which is essentially established by fear. But if this thing does break out, there's going to be some major selling, and I think it's just a matter of time, in my opinion. This is why I keep reiterating that you can't go based off of the pumps and think things are going to get all fine and dandy. I think there's just too much still on the back burner that hasn't played out yet, and it's getting worse, right? It's a storm that's continuing to build strength. It hasn't hit yet, and once it hits, then my opinion, my thesis will change. But until that happens, I'm going to remain and continue to short this market until it shows me otherwise. It's not saying I won't take advantage of rallies. I'll still take advantage of rallies. I have taken calls a couple of different times when hopium is just absolutely absurd and continues to push. So there's a lot of momentum behind it, but again, it dies off because there's no real true reason behind it. Things haven't gotten better, and depending where you're looking at, right? Like if you're looking at all the general um, data sets that every other analysis looks at, that every other analysis has been absolutely wrong about the economy to this point over the past like 2 years, um, things are not getting better. They're just not. And so until we see the Fed actually pivot, if things were so great, don't you think the Fed would pivot at this point? And they're not, because one, they know inflation will start running if they start letting off rates, and then two, they know that these things in general are really bad. They can see it. They've talked about rental units. They've talked about food, and uh, try to put that off. Well, it's so volatile. We can't really gauge that. So that's great, but that's where people are dishing out all their money. So with that being said, there's no point getting too crazy. Tomorrow is only Friday. You need to save some of that for the weekly updates, and get into a little bit more about the next coming earnings. I'm excited just to kind of see what's going to happen in the upcoming earnings, and I just really want to see how much. I mean, it's not exciting to see people lose their jobs. It's not exciting to see what these high rates do. It puts a lot of people in really bad situations. I don't like that, but this is why I talk about removing emotion, because when you're in the markets, you can't have emotion. You have to take things very objectively and be adjustable, because again, news, that candles could be pushing up technical wise. Everything looks great. It looks like we're going to run for the next 2 days, and then an event hits and it changes the dynamic of the market, and then it sells off. So you have to be very adjustable. You have to be very neutral about a lot of different things going into stuff. So again, we'll see. We'll see what happens, and we'll take it each day by day, and go from there. So that being said, if you made it this far, I do appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.